All right, welcome back to another episode of the Black Bullion Show for goldandsilvertoday.com. Gold and silver prices are back up today to start the week. I am a gold and silver guy, but I have to say that as a preface to the fact that I think this may just be one of those daily fluctuations within an overall, though temporary, pullback. Now, I'll get into why I think this shortly, but first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. Okay, so to start, we have to take a look at the DXY. As you can see, it's a bit lower than how it ended last week. There are times back then where the DXY was getting close to 95. So what's causing this slight weakness in the DXY? Well, we've been talking a bit about Brexit recently. So let's take a look at our Brexit sentiment litmus test here. And that would happen to be the pound over the euro. Now, as you can see, sentiment is favoring the UK right now with the ratio edging up higher, getting as high as 1.11. Dipped back down a little bit to 1.0, but it did get that high. Whereas last week it was actually around 1.09. So it did edge up higher. Now let's see exactly or what exactly is causing that. All right, so pound sterling in firm start against euro and dollar as Brexit talks head for final showdown. So immediately I'm a bit on edge here as far as the overall story for this video, but I'll explain why very shortly. The British pound is trading high or higher against the euro, dollar, and other major currencies at the start of the new week, amidst improved sentiment to the outcome of Brexit trade negotiations, which are due to end this week with a Thursday post-negotiating briefing likely to be a highlight. This week sees the ninth and final round of scheduled negotiations taking place, with new reports confirming the two sides remain optimistic that some kind of deal will be struck by the time an important EU summit comes around in mid-October. Quote, what currently matters more for the pound is the idiosyncratic driver of the UK-EU trade negotiations outlook. With the easing in rhetoric from both sides, pound has been therefore stable versus the euro despite the falling markets. The pound to euro exchange rate has recovered towards a 2-week high at 1.098 on Monday. Well, again, it did get as high as 1.11, while the pound to dollar exchange rate is quoted at 1.27. The pound to dollar has, like all major currency pairs, come under pressure of late due to a global dollar rebound. And therefore, the pound to euro remains the market's key gauge of Brexit-related sentiment. Okay, let's actually edge down a little bit further. The rise in pound sterling over the course of the past week is an expression of the market raising their expected odds of a deal being reached, having sharply reduced them earlier in the month when a row broke out between the two sides regarding the trade of foodstuffs between the rest of the UK and Northern Ireland. And that's something that we actually talked about. Also, we did talk about the internal markets bill that also seems to be a point of contention with one of the clauses within it. Again, as you can see right here, overriding elements of the withdrawal agreement between the EU and UK from last year. Just going to end this right here. While the UK is still proceeding with the bill, they have delayed its passage to allow the EU to speed up commitments that ultimately ensure there will be no barrier to trade of food between the rest of the UK and Northern Ireland. It has been widely reported that the EU have been in fact sped up the process of granting the UK third-party status for food imports, thereby diffusing the row. However, given the scale of the challenge of overcoming the final hurdles, some foreign exchange analysts remain cautious on the pound in the event of disappointment. Now, I'm actually going to read this one last quote here. Nonetheless, given the roughly 50-50 chance of deal versus no deal, we continue to see pound as inadequately priced for the risk presented, with limited risk premium built into the pound. We thus see risks to the pound on the downside. Now, the reason why I'm on edge generally about gold and silver prices in the short term is because if gold and silver are up on dollar weakness, and if dollar weakness is because of this, then we could be setting ourselves up for a buy the rumor, sell the fact scenario where things may not turn out the way we hope. And this move is just based off of kind of feelings and emotion, just because of, sentiment drivers. But as you can see here today, or should I say, at this current moment, the pound is really on top compared to where it ended things last week. Last week, I believe it got as low as to close to 1.16. Now, today it got as high as 1.29, which is still at this current moment at recording this. The euro edged up a slight bit, but it's not making anywhere near the moves it needs to in order to really bring the DXY down. Hence the reason why the DXY is down, but not significantly. Remember, the euro is weighted heavier than the pound against the dollar in the DXY. Now, let's talk about another reason why we have reason to be cautious here, and that is because of this. And it happens to be copper. Now, we've been monitoring copper prices pretty significantly on this channel as of late. We're starting to see a drop in prices, guys, and I think that deserves our attention, given that supply side issues were more of a factor in elevated prices than demand side. Yet supply side issues persist. As you can see here, copper gains capped by long-term prospects, higher stocks. All right, so let's get into it. Copper prices firmed on Monday as expectations of robust demand from top consumer China supported sentiment, but doubts about long-term prospects and a jump in London Metal Exchange stocks capped gains. Benchmark copper on the LME traded up 0.6% at $6,584.50 a ton in official rings. Prices of the metal used widely in the power and construction industries are down more than 4% since hitting a 27-month high at $6,877.50 last week. The rally was based on the massive Chinese fiscal stimulus in recent months, which boosted economic activity and industrial metals demand after the Ronies. Chinese demand is still rising, but not at the place it was. There will be resistance to higher prices, Julius Baer analyst Karsten Menke. Stimulus in China pulled demand forward. It did not generate additional demand. It is difficult for China to start large infrastructure projects, which have a big impact on the economy because most of them have been done. Now, that's a huge bit of information that changes the whole outlook of the demand side. Stimulus happens to be the main reason why demand upticked in China for copper, the largest purchaser of copper, and it wasn't due to natural demand initiatives. So that brings us to, a larger conversation regarding where we are as far as, a global recovery is concerned. If copper is an indicator of global growth and recovery, and its recent uptick may have essentially been inflated, then inflationary expectations may be muted to a minor degree as of right now. Now, I said minor degree. I'm not saying a major degree, just saying, inflation expectations may be somewhat muted. Now, yes, oil prices, for example, have risen a bit today. They're back above 40, tracking along the rise of the producer price index. However, I would be curious to see what direction the PPI, producer price index, heads in the coming months, as oil prices have also begun to trend lower since August, as you can see here. But all of that to say, we may be experiencing a minor uptick in gold and silver prices right now, but in the near term, I would continue to expect lower prices. But guys, let me know what you think in the comments section below. Thanks again for watching. Please hit the like button. Please subscribe if you're new. It's Black Bullion for the gold and silvertoday.com.